let's talk some tech. A little bit stronger, but also some lingering concerns after the DeepSeek sell-off. Arista Networks dropped big alongside NVIDIA and others last month, and it hasn't recovered a ton. Caroline Woods joins us from the New York Stock Exchange. Good morning, Caroline.
Hey there, good morning, Oliver. Yes, about 18% away from those all-time highs for Arista Networks that it had hit just ahead of the DeepSeek announcement a couple weeks ago. But as you said, hasn't really been able to regain a lot of those losses. And there is some optimism, though, heading into this report tonight. Shares are up about 2.5% right now ahead of earnings. So we'll see if that can be the catalyst to regain the rest of those losses. In terms of what analysts are expecting from Arista Networks, adjusted EPS of 57 cents on revenue of about $1.89 billion. That would represent about 23% year-over-year growth. Breaking it down by segment, the product segment expected to post revenue growth of 22% to $1.59 billion, and then the services segment up 30% is expected to $298.8 million. Arista had said it expects faster growth in AI and campus markets, but then slower growth in the traditional data center and cloud markets. We'll also pay close attention to margins. Back in November, Arista said that they expect non-GAAP gross margins of approximately 63 to 64%. So it was at 64.6% in the previous quarter, and then adjusted operating margins of approximately 44%. Now, for 2025, Arista has already said that it expects a decrease in gross margins to 60 to 62% due to a customer mix change or changes in customer mix. So we'll see if they give any updates there. And then in terms of overall for 2025, they had said that they expect revenue growth to decelerate to 15 to 17% growth in 2025 compared to previous years. So that would translate to about $8 billion in 2025 revenue. So just to put that into perspective, in terms of the 15 to 17% growth, it was at 33.8% in 2023, is expected to be at about 18%. We'll see what they have to say in terms of the revenue number for Q4. But we are expecting a revenue growth deceleration if they provide any updated outlook. So shares up about 2.4% right now, still negative year to date following that DeepSeek plunge. It's still down about 1% over the past or year to date, but then up about 64% over the past 1 year.
Okay. The 1 year chart, your point, looks great. Short term, not so much. But also, since it really did align with the DeepSeek stuff, just maybe folks haven't, maybe it wasn't top of the list for people, the shopping list. As soon as NVIDIA dipped, we came back pretty fast the last couple weeks. So NVIDIA back above 140. Not quite where it was, but a lot closer than ANET is. Maybe it'll take ANET earnings to, highlight it to people. I don't know. It doesn't. There hasn't really been anything new since that I guess would really change the 1 year trajectory, which seems quite good.
Yeah, we'll have to see if, this is the catalyst that does that. I will say Morgan Stanley did come out recently and maintain its buy rating ahead of earnings, but basically said they don't think that these Q4 results are going to be the key catalyst, just saying that further multiple expansion is on hold until the company shows a meaningful amount of new customers. But they did talk about the underappreciated opportunity in the data center space. So sticking with a buy rating, and I will say the majority of analysts very much view this as a buy. If you take a look, 80% right now heading into earnings have a buy rating on shares. Median price target, though, is only $115, so only about $5 and change, $5.50 higher than where it's currently trading right now.
Okay. All right. ANET, okay, looking all right. And also, we saw Cisco rally through earnings, make highs, companies that have a good bit of overlap here. So I can kind of see why maybe, there might be a little bit of anticipation in a positive way for this today, because 2.5% is a lot better than what we see in the rest of the market.
Yeah, I mean, we're seeing Cisco and Juniper both higher today as well.
Good point.
But Arista Networks is definitely the clear winner with that 2.5% gain. Cisco's only up about 0.4%. Juniper is up about 0.3%. So yeah, we'll see. I'm sure we'll be talking about it tonight.
True. All right, we definitely will. Thanks, Caroline, very much. Appreciate that. Good look at Arista ANET going into the report with a nice rally. Tim Biggam joins us, option strategist at Buy Alerts. Tim, good morning, sir. You fishing for a dip here or what?
Yeah, I've kind of got certainly my line in the water. in a smaller way. So taking advantage more of what I think is a little bit overstated IV in this name, given that, severe sell-off post DeepSeek, where the stock really just bottomed out around 100 level, did have a nice bounce off of there. So certainly some buyers stepping in around that area as well. But the upside, as you and Caroline alluded to, may be a little muted as well. The analysts agree with that too. So multiple expansion sounds like it might be difficult from here. So I'm just going out and really being a buyer on further weakness. Options implying about a 10 to 11% move on earnings here. So I'm hanging my hat down around that 97.5 level, which would equate to that lower boundary, and right below that kind of $100 support where it bounced after the DeepSeek sell-off, selling the 97.5, 95 put spread, bringing in around 50 cents or so net credit. So like that return on risk of around 25%, giving myself a nice 10% downside cushion. And the fact that I think that this stock probably will bleed out sideways. The market, as we're seeing today, having trouble making new highs. So upsides may be limited from here, but I think downsides on stocks like Arista and some of the more beaten down names, certainly in this space, probably limited as well, at least for the time being.
Nice. I like that logic, given that the stock had a really good run, and what we saw from Cisco looked pretty good too. Even Juniper bounced on the earnings. Rather betting against downside than betting on upside.
Yeah, exactly right. More than happy to maybe be a willing buyer on, further weakness and weakness of over 10%, given the trade structure here, but really not chasing almost anything in stocks here. I think stocks generally getting a little bit, tired and fatigued, and the multiple expansion that we saw that lifted stocks is starting to slow down, especially with the 10-year yield at 4.5%. So I think stocks generally might have trouble moving appreciably higher here. So I favor just kind of using weakness to sell out of the money, put spread strength to sell out of the money, call spreads, play for kind of a range-bound market. That's kind of what I'm doing here on Arista. And given the fact I'm able to sell almost 140 IV this week on earnings, next week trading just under 100, have a very nice term structure vol edge this week for this trade as well.
All right. Looking for, or I should say perhaps angling for a stable stock and maybe a rally.
Yeah, we'll see if they will lure some buyers in at lower levels here to support the name.
Nice. Thanks, Tim. Appreciate the trade, sir.
You bet. Take care.
Selling downside and Arista Net into the report. Tim Biggam, option strategist, buy alert.